So it's officially a technical recession in Canada. Statistics Canada just dropped the official numbers for Q1 of 2026. And instead of projected growth of 1.5% that the banks were projecting, the economy actually shrank by 0.1%, because the last quarter of last year, Q4 of 2025, has also seen a drop of 1%. We have officially hit the definition of a technical recession. But what does it really mean? Well, let's get right into it. Of course, as a credible person, credible YouTuber, I am bringing up Reddit, the number one source of information and misinformation out there, and specifically the Personal Finance Canada subreddit. So let's take a look. I think before reading the actual reactions, let's see the report. So economists pour cold water on recession talk after Canada's economy stalls in Q1. So let's get right into it. Canada's economy is still struggling to grow, but some economists weighing in on the latest real gross domestic product results Friday argued that the weakness may not qualify as a recession. So once again, as I mentioned, StatCan reported Friday that the economy stalled in the first quarter of the year, while real GDP by expenditure was flat on quarter-by-quarter basis. Converting that to an annualized rate, the figure most economists pay close attention to, magnifies the quarterly changes and the result in a decline of 0.1% for the first quarter. And this follows a real GDP drop of 1% in the fourth quarter of 2025. So what does that mean? 3 of the last 4 quarters in Canada have now posted negative real GDP growth. 2 quarterly contractions in a row meet some definition for a technical recession, though not all economists weighing in on Friday were convinced. But again, right, this is the simplest, most straightforward definition of recession. And for the longest time, it was, while Canada has been struggling with ridiculous inflation, super high grocery prices, housing cost issues, and now problem with fuel, thanks to the Iran war, we have not officially been in a recession, similar to many other countries. And we finally hit this criteria. But obviously, things are not as black and white as one would want. There's a couple economists' takes that I really like, and we'll get to the last one that I really love, but let's start. So don't get me wrong, the economy has struggled to gain any meaningful traction over the last year or a couple years. But for now, we wouldn't necessarily call it a technical recession, said Mr. Mark Ercolao. He said the decline in real GDP last quarter was still basically zero and could easily be revised in a future StatCan report. Unfortunately, it doesn't kind of change the fact that the growth was still pretty horrendous. And so he pointed to an unexpected weakness in government spending, which had been strong through 2025 to help explain the lower result. And another economist, Doug Porter, says here that there is no sense sugarcoating the sour result, as the economy has clearly been struggling to grow since the start of the trade war, which is very true. There have been a lot of challenges that Canada has been kind of witnessing. And of course, I would say that it doesn't feel necessarily dramatic right now. I mean, I would say grocery prices going up 10, 15% every month in 2022 or 2023 felt a lot more like we're in a recession versus right now, where the prices have somewhat stabilized. Unfortunately, it seems like Canada is between a rock and a hard place here since COVID, with the housing prices and rent prices going up tremendously, especially in newer markets like Calgary, Alberta. That's where I'm reporting from. As well as, the grocery price has been going up, the taxes have been going up, property taxes, insurances, now the gas prices on top of everything. So it's hard to say when it's kind of a challenging situation. I don't even know what qualifies as a recession anymore. I feel like we've been kind of stuck in this place for a few years now. And I think the whole world has been. And of course, the trade war last year has not helped. Seeing imported products go up in price by, 10-20% is not ideal. I'm still heartbroken about the Kirkland protein bars. They used to be $30 a box, and that was just last year, I think, and now they're $35. So it has not been easy. But okay, little note here. Not all economists weighing in StatCan's report were convinced the label was necessary over a technical recession or over recession. Higher imports of gold dragged down activity in the first quarter, and exports were mildly negative. Weak resale activity in the housing market also hurt the first quarter figures. Okay, business capital investment, which is, in my opinion, more alarming, fell for a fifth consecutive quarter, although it makes sense because largely chalked up to uncertainty surrounding U.S. tariffs. It's hard for many firms to draw up spending plans without clarity on what trade relationship will look like in the foreseeable future, he said. And again, this totally makes sense. I feel bad for all these business owners that either had production in Canada, pushing stuff to the U.S., or buying some materials from the U.S., and now the material costs are going up. And it's hard to make a 5-year plan when things can change month to month. Usually tariffs take years and years and years to properly set up. There have been tariffs in the past on Canada, a lot of other countries from Canada, from the US, but they usually take a long time to implement. They don't happen on a whim. It's challenging for businesses, again, to invest. Even foreign firms, like building car factories in Canada was a way kind of to get access to the Canadian and the US market, for example, due to the agreements between the countries. Same as building factories in Mexico, so cheaper labor, of course, but as well as being able to sell them to the States, one of the biggest markets in the world, without big tariffs, as if, for example, if the car was manufactured directly in another country. But unfortunately, it is what it is. So drags on output in the last quarter were offset by a ramp up in business accumulating inventory and higher household spending. Many economists also gauge the breadth and depth of a downturn before declaring a formal recession, which is fair. You don't want to scream wolf until all the signs are there, kind of. And this guy, Ali Jaffery, is my favorite. I mean, I'm a big fan of the guy just in general, but this quote kind of did it for me. So is Canada in a recession? Probably not. But whatever you want to call it, it's not good. And to me, I think that's what we've all kind of been going through, right? Like, it doesn't feel like necessarily, it's not the global financial crisis, but it has been challenging. So whatever you want to call it, it's not good is such a great way to put it. It's such a inelegant, simple way to put it. But yeah, like it feels like Canada has just been like struggling, and as I mentioned, for a couple of years now. And with this oil prices, hopefully, I know Alberta has been selling oil for a lot more down south for refining, so hopefully at least the budget will actually, so I think Q2 will actually look quite a bit better. At least that's what I've heard the economists say. So we'll see what happens. But yeah, Jeffrey also said that 2-quarter contraction rule is a crude bar for measuring a recession that fails to take into account income and labor market conditions. Of course, as I said, not everything is black and white or simple. Humans love simplifying things, but it's not always the case. Slowing population growth has meant fewer new households are adding to spending the economy, weighing down overall activity. And that again has to do with, lowering the immigration targets over the past year, I believe. It hasn't actually been that long, but still, it does affect projections, right? So on per capita basis, real GDP rose 0.2% in the first 3 months of the year as Canada's population shrank for a second quarter in a row. And this is another big number, GDP per capita. While it's still an imperfect number, it gives you a little bit of a better idea of what's going on. Of course, if the immigration has been dwindling a little bit, it affects the education market, right? The expensive international fees that people have been paying, it affects the rental market, it affects the businesses, it affects government programs. There is a lot of stuff. So again, this is just one of tens or hundreds of factors that you have to, kind of add to this calculation before you declare a recession. So StatCan mainly blamed weakness in Canada's resource extraction industries and in construction activity for a 0.1% decline in GDP in March. And as I said, with prices of oil increasing, while the gas prices have been incredibly outrageous all over, we have, like Canada as a country, we produce a lot of it. And while not ideal, and this war in Iran is hurting the global economy quite a bit, at least Canada is lucky that we actually produce a lot of it to benefit to somewhat. And the last 2 quarterly contractions are mostly due to real GDP declines October and March. Growth has either been flat or modestly positive for the 4 months in between. And so Mr. Bradley Saunders said that the trade-induced technical recession was likely already over, as rising oil and gas activity in the second quarter of 2026 is tracking for a solid rebound. And that's now it seems like I've just read the article and just retelling you this, but I did know that before reading this, how, the fact that we produce oil in such large quantities and selling it down, so the price of it goes up. It's really great for us as a country, and not just Alberta, but a lot of federal stuff goes to the federal budget from Alberta. So it's a win for everyone, except for our wallets when we have to gas up, right? So StatCan's early estimates for real GDP in April call for a sharp rebound of 0.4% growth as the mining, quarrying, the oil gas sector return to growth. Those figures are expected to be revised next month. So let's see what happens. Also said, on net, rising oil prices tied to an ongoing war in Iran generally support Canada's economic growth, and current price levels should offer a lift to GDP results in the coming month. The Bank of Canada will be scrutinizing the latest GDP figures ahead of the next interest rate decision on June 10th. So again, something to look forward to if you're in the market to renew your mortgage or buy a house, or if you're on a variable mortgage. That's the most fun part. The central bank has held its benchmark interest steady at 2.25% at its last 4 meetings as monetary policy makers wait for the clarity on Iran war and US trade developments. As of Friday morning, financial market odds were 99% in favor of an interest rate hold at the Bank of Canada decision next month, which is a pretty confident call by them. They didn't even do a 90%, they did 99%. So that's, to be fair, yeah, so that's happening in a few days here. We'll see what happens. Okay, so Porter said the soft first quarter GDP figures should really throw a wet blanket over rate hike talk in financial markets, as the economy is in no condition to deal with higher rates. And again, right, the economy needs to be stimulated. If you increase the rates, all of a sudden every line of credit, every variable mortgage is going to go up. People have less money to spend. And of course, it all goes down in the economy, right? It all trickles down. These little decisions. Lastly, Erkelau said the StatCan report points to slack in the economy. If price pressures do threaten to spread from the Iran war energy shock, that sluggishness should limit the overall inflationary impact, he said, keeping the Bank of Canada comfortable on the sidelines. Our view is that there is no clear sign that interest rate hikes are necessary, so we expect the Bank of Canada basically to remain on hold for the remainder of the year. So the StatCan report itself on the Government of Canada website is actually pretty digestible. They make it really easy to read. So I encourage you to just take a look yourself, because it sounds very intimidating. It was to me, actually, because it's government doing very boring calculations on gross domestic product. That sounds very complex and boring. You'd rather do something else with your time. But I was surprised when I actually checked it out. I suggest, just for personal development, go ahead and take a look at it. You know what? Let's look at it together. Yeah, as you can see, it's a really nice, digestible article with charts. With little percentages, right? That clarifies import rose 2.9% in the first quarter of 2026. Half rise coming from intermediate metal products and waste and scrap metal, both of which were driven by gold imports. Stuff like this. It's very easy to understand. There is stuff about oil here, right? Increase of shipments of crude oil and crude bitumen, as well as natural gas. It talks about business investments, residential structures again, government investments, household spendings, export prices, this kind of stuff. And as I said, it's very digestible. There are a lot of charts. And it's just very interesting to read, because I've read some financial reports that are incredibly dry. When I made a video about CPP underperforming their own benchmarks, that was incredibly boring. And it was a report of, I don't know how many tens of pages of just technical data. Here, I think literally anybody who is interested in finances and economy, and I'm sure you are if you're watching this video, can find something useful in this article and can and again, it's not a bad thing to actually do once every quarter. It's probably going to take you 15 minutes. And lastly, let's go to Reddit just to take a quick look here. So I actually have not gone over the thread, so I'm hoping it's going to be civil. I see that it has been locked, so I'm not sure. Or never mind, it's just a little message here. So 9.2 unemployment in London, Ontario, the worst in the country. How did that happen? London is only top 10, but it's the worst in Ontario. Let's take a look what's going on with the unemployment numbers here. Of course, we're going to sort them. I think there is a comment about Quebec. Good for Quebec. They're actually doing pretty good. I feel like Northern Alberta, Northern BC, so all the resource extraction kind of places. Let's look at the towns, not just general areas here. So yeah, okay, Oshawa, London, Windsor, okay, Kitchener, Toronto. So interesting. It's actually quite alarming, because yeah, the top 10 towns or cities are all in Ontario. So it's very interesting. And then a couple in BC. Oh, just one in BC here. Then Niagara, Huron, and interesting, Montreal and Calgary here as well, pretty close by, and Alberta, yeah, Edmonton not far behind. A bunch of the rural areas make sense, but Toronto and Kitchener being near the top is kind of crazy, and Calgary and Edmonton there as well. Not as high as Toronto, not that far off either. And this is something very interesting. How's Quebec doing so well? South Central Quebec has an employment rate of only 2.7%. Quebec City seems to have around 3.5%. Meanwhile, Toronto is 8% plus. And yeah, keeping it as political as possible, Quebec has a higher barrier to entry for immigration. If you don't speak French, most of Quebec is hard to live in, so English-speaking international students can saturate some employment markets, but not French-speaking ones. It's very interesting. I didn't actually think about that. And of course, people are complaining about the provincial government, but I think the biggest point really is the barrier to entry. The supply is just a lot lower, hence this. But looking at these numbers, it makes you a little bit like, oh, that's nice. And of course, people talk about a lot of immigrants who want to work cash jobs. Lots of factories here hire for this stuff in cash. To those people who don't get counted as employed, I bet Newfoundland is worth. And so this is new. The Canadian economy stalled after COVID and wasn't doing great before that either. Canada needs to put in big boy pants on and aggressively start building interprovincial industry. This is very true. this. I need to make a video on this. I'm just so interested to actually get into the nitty-gritties of this interprovincial industry and how there are so many barriers to trade between, BC and Ontario. A lot more barriers than to trade between BC and the US or Ontario and the US. That was kind of the whole platform that Mr. Pierre has been campaigning on, right? When the tariff started. And not rely solely on raw mineral exports. This should have been done years ago, but the second best time to plant a tree is today, so let's do it already. I totally agree. That actually sounds like something we should do because, as I said, great, Alberta is exporting a lot of oil, lots of mining in BC, mining related in Saskatchewan, but at the end of the day, we gotta sell something besides the minerals. We can't just have the extraction industries, right? On other metrics, we've been in a recession for several quarters now or borderline. And this guy was it's been a recession since 2022. We just avoided it on technicalities. And this is kind of how it feels, how it has felt at times. As I said, expensive groceries, housing costs, rents has been challenging. But anyways, right, so people kind of are talking about the same things, how it's been 3.5 years for the technical part of the recession to surface. Ask anybody if it's been going on years or just surfaced, right? But yes, it's the reason they don't want to increase interest rates is then consumers will stop spending or will start spending less. And that makes the recession worse. And that makes the consumer spend even less. And it's kind of snowballs from there. But anyways, mostly it's people just complaining on Reddit, so I'm just going to wrap it up. Just a little video I wanted to make. Thank you guys for, sitting out with me and kind of going over the Q1 2026 recession article. What do you guys think? As I mentioned, it does feel like it has been kind of hard since, 2022, 2023 here, in Calgary, Alberta. The housing market has absolutely exploded. House that used to be $300,000 is now $500,000-$600,000, while the salaries obviously haven't budged. Is it the same in your city, wherever you are, your province? Let me know down in the comments below. And thank you so much for watching. I really appreciate it. See you in the next one. Take care.